Today is Friday, April 22nd, and this is the ADM Investor Services Weekly Market Wrap-Up. We have Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Please remember that the views and opinions expressed on this video are those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Steve, let's start with the grains. A lot more action this week. Tell us what happened and what to expect moving forward.
Well, we had a lot of moving parts come at the same point. I think that we saw a rally in energies. We saw some money come in because of concerns about inflation. We saw prices of metals like silver move higher. And we saw some weather concerns in South America, too dry in Brazil, too wet in Argentina, and saw some short covering. That ran into some heavy farmer selling both here and in Brazil. We moved soybean prices from $9.50 on April 8th to $10.40. We're now back below $10 today. We moved corn prices from $3.65 to $4.07, and now we're back below $4 at $3.84. And moved wheat prices from $4.50 to $5.18, and we're now back below $5. So it kind of adds to the volatility of the hopes that economies are getting better, but at the same time, we're working off of large global world supplies of grains.
What's our weather guy saying? I know that you always say that our weather guy hopes to be right 50% right 20% of the time. What's our weather guy saying in regard to the spring and summer forecasts?
Well, so far in the U.S., the spring's been good. We've got some rains in the southern plains that help the winter wheat areas. Farmers are planting corn and planting corn earlier than normal. When we look at the month of May, it should be drying out and warming out in the southeast part of the United States. Then that dryness in June moves into the southern plains. And the summer is when it gets real interesting. If we switch from El Nino to La Nina, he will increase that warm and dry bubble up into the western part of the Midwest. And if we get to an extreme point, we could also move that into the northern plains and into western Canada. So the volatility in the weather market could be different than normal this year, and it adds to the uncertainty of price discovery.
South America, now we approach the end of the growing season in South America. Some talk of weather there. It was a little bit dry. Can you tell us what's going on in South America?
Well, for the U.S. farmer, it was a perfect storm. At the end of the season, Brazil turned dry, and their corn production was lowered, and that could add some demand on our side. But more importantly, in Argentina, it's been a wet harvest. And some people thought they could lose as much as 20% of their soybean crop. It's been delaying their exports and could help our meal and soybean export demand, not only this year, but down the road. So the South American weather has turned less than ideal, and it's helped move prices higher.
Alan, the stock market continues to trade higher. On Wednesday, the Dow advanced to new highs for the year. Is there resistance at the all-time highs, and we're not too far away from that area? What's your take on that?
Well, there's a natural resistance at any new high, and I think like the previous resistance areas that we have seen in the stock indices, this one will be taken out as well. So look for higher prices in all of the stock index futures. Any new high that we see over the near term, I think will only be a temporary high, and ultimately we will see continued strength.
How can one get aboard this train? Is it too late?
No, it is absolutely not too late. Any break on any type of bad news, any type of bearish news should be used as a buying opportunity. I would say any 20 to 25 break in the S&P I think would be about enough to come in with a long position.
Another market that has moved nicely off the lows is the crude oil. Now trading at a 5-month high. What's going on in this market? Do we still have an oversupply?
Well, we do have an oversupply, but I think we are becoming more and more in balance. And the prospect is that there will be a better supply and demand situation. Now, one thing we do feel is that China has turned the corner, which is very much a minority view. Most analysts do not think that is the case, but we do. And the reason we think so is that the stimulus that China embarked on a year ago, this January, is finally bearing fruit, and it is showing up in their economy with better numbers. It is also showing up with money supply growth in China. So China is coming back, and I think that they will be a much bigger buyer of commodities going forward, including crude oil.
So crude oil has moved off the lows despite not a lot of cooperation amongst the OPEC countries in regard to any type of production cuts. What's been happening in the news in regard to that?
Well, there was a meeting last Sunday, an OPEC meeting, and there was some limited hope that they might come up with some type of production freeze, which was not the case. But interestingly enough, what has happened is that the price of crude oil is now higher than where we were Sunday night when we had that $2 break in the crude oil. So we're very much ignoring bearish news, and that in itself has to be viewed as a sign of strength for the crude oil market.
And the relationship between the crude oil market and the stock market. Earlier in the year, the crude oil, weakness in the crude oil was blamed for some of the weakness in the stock market. Are these two markets still trading in tandem?
They are, and right now with crude oil advancing, you can also give credit to the crude oil for one of the reasons why the stock indices have done so well lately. So that relationship is likely to continue. So look for higher crude, and correspondingly, we would look for higher stock indices.
Another question for you, Alan, turning to the metals. Silver saw a little profit taking after making a 14-month high. What's the outlook for this market?
The silver market still looks very bullish with what we're seeing. There was some talk on the part of the bears yesterday of the potential for a one-day reversal to the downside, which did not take place since we did not close near the lows. So the outlook for silver is higher. I would expect to see before the end of the year possibly $18.50 to the $19 range. And I think the outlook for gold is basically the same. Look for higher prices in gold as well, possibly surpassing $1,300 in the gold.
Steve, Goldman Sachs came out the other day and said that the recent commodity rally was not based on sound fundamentals. What's your take on this?
Well, I disagree because, like Alan said, we're seeing some better economic news out of China. We're seeing some maybe emerging markets that are improving, and that could fuel the commodity price rally. We're also seeing money coming back into the market that we haven't seen in a long time, trading things like silver and soybeans in tandem because of the threat of inflation. And I think we're also seeing some potential better supply and demand numbers in some of the markets. So I think that the commodity markets from a deflationary standpoint have bottomed. And I think that we're maybe not into an inflation phase, but we might be beginning to go into one.
And finally, what's hot and what's not?
Well, I think that we're seeing some profit taking in some of the markets that rallied pretty sharply in the last couple of weeks. You're seeing a little bit of profit taking maybe in the metals. You're seeing a little profit taking in the bonds. I think one market that might have be on the defensive is the yen, and it could continue to work lower. On what it might be continue to work higher, I agree with Alan in that crude oil prices could work higher. I also note that in the grains, soybean oil has been kind of resilient with all the liquidation of the long oil short meal spreads, and soybean oil might continue to work higher. And then we have to kind of watch for a weather market this summer. And so if any sell-offs, like in corn or soybeans, we might see those markets move a little bit higher this summer if there's a weather problem.
Remember, the thoughts and opinions expressed on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any comments or questions, or if you'd like to find out how to open an account, please visit www.admis.com.